Flutterwave is making a massive play for talent retention, celebrating its 10th anniversary by promoting a staggering 25% of its global workforce. It's a bold counter move at a time when many tech companies are scaling back. Still on fintech, the standalone journey of one of Nigeria's once beloved digital business bank has officially come to an end as Brass has been fully absorbed into Paystack Microfinance Bank following a 2-year rescue effort. And there's a major shift in the core banking landscape which is underway as Interswitch partners with the global software giant Temenos, officially entering the race to modernize banks' back-end infrastructure across the continent. These and more stories on tech and innovation in Africa. Welcome to Tech Tides Africa podcast. This is Karen, and as usual, I'm joined by Kelvin. Kelvin, how are you doing today?
I'm doing good. I'm feeling a bit, how would I put it? A bit under the weather, but I think it has to do with the fact that rain was pretty much falling the entire weekend. On Saturday, it was falling the whole night, and then on Sunday, it was falling the whole day. So, a very wet weekend over here. So, it's taking me a moment to wake up properly. But I'm doing well.
Oh, those days when you just want to be tucked in your blanket for another hour.
Yeah. Like, let me get some more sleep.
Well, I'm envious. On my end, it's been one of those weeks where all my electronics are just misbehaving. So I don't know. These guys who practice spirituality, is Mercury in retrograde or what is happening? I don't understand. Anyway, let's start.
Anyway.
We recently joked about a week being an AI week, and it seems this week is a fintech week. We are back at it, starting with Flutterwave. Flutterwave is one of the fintechs that we have talked about quite a lot on this podcast because of the way that it is growing and maturing. And they have just promoted quite a large number of their workforce. It's entering its 10th year. It has promoted more than 100 employees, which is roughly a quarter of its global headcount. And it's rolled out cost of living adjustments, tax support for the Nigerian staff, and a one time economic relief payment across all markets. And I think it's a very deliberate move because we're seeing other fintechs right now, many other tech companies, not just fintechs, but we've seen things like Branch, Kuda. They've been reducing their headcount this year, but Flutterwave is doubling down on ensuring that it's retaining its talent and also increasing their income capacity, which is fabulous to see.
I think we would always talk about Flutterwave because they are one of the big companies in the tech space in Africa. So something is probably always happening there. We are still expecting their long awaited IPO. So that's probably somewhere around the corner. And now they have promoted 25% of their workforce, which is quite impressive. I believe a couple of weeks ago we talked about Time Bank that gave pretty much a large majority of their employees shares in the company. And I believe we are seeing some techniques by these bigger companies to help to retain talent. They are trying different strategies for this. So in the Time Bank case, it was shares. In Flutterwave's case, is promotions and just improving the compensation package for their staff, and it will definitely help with retention for some people. Obviously, there would always be attempts to poke your talents when you have really good talent, so they're trying to do things on their own parts to encourage employees to stay loyal, right? And I believe it's quite impressive. And they are doing it at a time where, like you said, a lot of companies are letting go of people. So again, timing is quite interesting for that. But probably they are doing well. They can afford to run the numbers, and it's definitely a move like this that we want to see from some of the bigger tech startups, tech companies in Africa, right? Consolidation at the top is something that you want to see. But then there are benefits of that, and maybe there are some reservations. I believe we covered it in a recent article published on Startup Graveyard, where we talk about the dominance that some of these bigger fintechs are beginning to have. It may be leaving little room for smaller players in the space, but then again, this is a net positive for the ecosystem.
Yeah, and I think this is also a big confidence boosting move on their part in terms of it's a very good PR move if you were to ask me. Other than a good but probably HR move, I think it's a very good public relations move because this builds confidence in your market that you're probably financially healthy as an organization. It boosts a lot of positivity and brand loyalty because people begin to see you as a brand that protects its people in the face of others letting them go. So it's a very smart marketing move if you were to ask me. The amount of confidence that they are building for the markets that they are serving. And it also shows a strong confidence in their people. We are seeing them grow quite a bit. If you look at their company reports, they've had 1 billion transactions processed and more than 40 billion in total payment value since they launched. In this year alone, their bank transfer value grew by 184% over 1 year only. So they are a brand that seems to be making the right moves, growing very fast. And then a move like this cements that brand loyalty with people, especially in Africa now, where employment is becoming a bigger conversation. So it's a very brilliant move.
Yes, it is. And a couple of weeks ago, we talked about how Flutterwave and MoneyPoint disrupted the card industry in Nigeria. And they have come a long way from 2016 at the beginning where they started. 10 years down the line, it's a long time. We are now beginning to see them evolve from a fast growing startup into a financial infrastructure company. So it's always good to see moves like that. It kind of helps to validate the rest of the ecosystem and what the founders and investors are trying to build. So hopefully we can see more positive news like this, especially with the wave of layoffs after layoffs we keep seeing. We are now beginning to see a couple of positive moves to retain talent, and all for it. On our next story, we are talking about brass, and unfortunately, this is not a positive story. So, brass was launched in 2020 as a corporate banking solution for small businesses, and initially, they enjoyed a lot of popularity. They onboarded over 5,000 corporate accounts, and they had some very big clients like Eden Life, Mono. But then they were talking about the shutdown of Brass. It has been quite a publicly reported story. So back in 2023, there were issues with customers trying to perform transactions, and there was a lag processing these transactions. Some merchants reported double charges. And so in 2024, a Paystack led consortium decided to step in. It was made up of Paystack, Piggyverse Ventures platform, and some angel investors. And they stepped in to take up a burden because they realized that a Brass had a 2 billion naira debt that was making it hard for them to facilitate this transaction. So they stepped in and removed the founders. They exited the company, and then Paystack got his own employees to oversee the administration and facilitate day to day transactions. And the original team of Brass was pretty much 2/3 of them were laid off, from 60 to 20 workers. And the Paystack team was trying to execute day to day operations. They tried a small rebrand to Copper Brass, but none of these things stopped the core problem, which was that the infrastructure was not reliable and the customers kept on having their phones trapped. So, a couple of weeks ago, I think about 2 weeks now, they announced that the brand will cease operations by July 31st, and customers are advised to migrate to Paystack's microfinance bank, which pretty much offers the main services that Brass did. So this is the end of a journey from 2020 to 2026. It's a long time, about 5 years building a startup. But unfortunately, this wasn't one of the wins. It didn't end up as a win. And it goes away as a product that, from my understanding, a lot of the customers really liked and really wanted it to succeed, but it just didn't work out.
Yeah, it's a very interesting story, Calvin, because usually when we talk about tech companies on this podcast, the problem usually is the founder has built a very good product but has not been able to market the product. I think we spoke about a story a couple of weeks ago. I can't remember which company this was, but the founder actually returned money to the users. He felt he had a very good product, but he was not able to distribute it. And I think that's usually the story that we hear most of the time. So this is very shocking, where a product actually has consumers, but the product is not able to deliver on the promise because the infrastructure is not up to par. And it's a very new concept, perhaps, to me. Obviously there are a couple of stories that we have seen that have that, but majority of the time is the product is good but the customers are not ready for the product, or rather the technical part of the product, let's call it that way, because product is good is broad. The technical aspects of the product are quite good because most of the founders are actually tech people themselves, and so they are very keen on the technicalities and the infrastructure that they have built. Now, whether the infrastructure itself solves a problem or not, that's a different question. But usually that's what we see. But here we're seeing a product that I actually think was solving a problem. However, the technical aspect of it was not as good as it could be. And you can correct me if I'm wrong, Kelvin, because this is your area of expertise. But that's how I feel. And it's a very new, it's quite new to see. But I do think that you have spoken about two things that are quite important. The first one is the liquidity issue that they had. It's a major thing. We see that they were backed, they raised money at some point. So the question is, what is it about the operational management that was causing liquidity issues? Did they perhaps need to raise more money? There's a question there to be answered that I'm not sure how to answer. The withdrawal delays, I wonder whether that was part of the liquidity issue as well as the infrastructural problem. Another question to answer. And I do think that tech founders, especially in the fintech space, have to think about certain things from a business mindset, things like unit economics. Things like cost of customer acquisition are usually things that will eat your balance sheet, and you're not able to, if you've not calculated it, you won't be able to pinpoint the problem. Liquidity management, I think that we have discussed quite a lot on the podcast. I do think that part of what we will continue to see in this space is consolidation, and we're going to talk about partnerships and consolidations, and we're going to see that in a different story on this podcast today. I think we're going to continually see that as the market matures, we're going to see more people consolidating, more mergers happening, where, for example, Paystack has seen that there is something about this organization that will benefit the business and so has absorbed it. And I do think we'll continue to see this happening.
Yeah, I believe so. I believe we would continue to see acquisitions like this or mergers like this moving forward. And my own speculation, so this is just speculation, it's not fact or anything. The liquidity issue seems to be the main issue. And I am speculating that based on what was reported, they just didn't have enough funds to settle customers at a time. Because you know how banks work, you get everybody to give you their money, but then you hope that everybody doesn't want their money at the same time because there are things you're doing with that money, right?
Then you get people that money.
So yeah, and I believe it's called a bank run when everybody's trying to withdraw their money at the same time. And I feel like it's not that the product wasn't working. I just feel that they didn't have enough money to settle customers all at once, as well as run their day-to-day operations. and that's what caused the liquidity issue. They did try to raise again. They were supposed to raise, but it just didn't seem to work out. And obviously, Paystack stepped in, but at that point, there is a reported 2 billion naira in debt. It's still going to take a while to settle everybody and then start to function again. So I just feel like it's one of those things that they were not able to get ahead of the liquidity issue in time. So maybe if they had been able to raise funds, I think they would have survived the crisis. But once they were not able to do that, and once money wasn't coming from anywhere, in terms of like revenue that's able to settle those requests, yeah, it was always going to end one way. And I believe that's what we have seen now.
Awesome. That's a very good insight. Thank you for that. Moving forward, still in the financial technology space, Interswitch, which is a Nigerian payments giant, it's behind Quick Teller and Verve, has partnered with a Geneva based company called Temenos. I hope I'm pronouncing that right, to offer managed banking services. It's good to realize this guys actually crossed 100 million cards issued in December 2025. So they have a very good customer market base. They will be looking at core banking systems, digital banking payments, wealth management, financial crisis, crime management across different markets in Africa, like Nigeria, Kenya, Ghana, Cote d'Ivoire. And this deal is going to allow them to sell cloud hosted and on premise banking infrastructure directly to lenders, which is good because we are seeing a lot of banks are now heavily investing in digital technology to just digitize most of their work.
Interswitch is an OG. So Interswitch was founded in 2002. So they have been around for quite a while. And it's actually impressive. Like they have seen so many changes in the financial technology space and they are still around. It's such a long time. The thought of a company that has been running in this space that we have seen so many fall away by
Right.
the wayside and they are still going. And InterSwitch is very much integrated with like traditional banks infrastructure with payments. QuickTeller is the popular one, but they also have the VEF card that they are pushing. Like you said, 100 million cards distributed so far. So InterSwitch is not small by any means. They are quite successful. And this partnership seems like they want to deepen their integration with traditional banks because this partnership will enable them to use Temenos technology to provide core banking solutions for traditional banks. In 2024, we saw a lot of Nigerian banks upgrade their core banking systems, and in that year, over 260 billion naira was spent by just six Nigerian banks. And I think InterSwitch is seeing an opportunity for them to take a piece of that pie with them. And yeah, it's quite interesting this in partnership. It's looking like InterSwitch is trying to move just a bit beyond payments because they have always focused on building payment solutions. But now it looks like they are moving just outside of that to start offering core banking solutions. And it's reflecting a trend that we have been seeing a lot this year where these bigger fintech startups and companies are beginning to consolidate and expand to other spaces within the financial technology industry. And InterSwitch is also taking a cue in that direction as well.
One major trend that we are seeing that they have confirmed is the move into infrastructure. So they've been a participant in the infrastructure space, but now they're becoming a vendor for infrastructure. And we've seen that becoming more and more common in the fintech space over the last couple of months. We've seen a lot more tech people move into building infrastructure, and we've seen that those companies are a lot more resilient than companies that just focus on direct to consumer. So it's an interesting trend that we're seeing, and a very smart way of doing it. I also do think that a lot of banks have been reliant on core banking systems, legacy core banking systems that are no longer able to work at the level of speed and efficiency that the consumer today requires. And the more and more we're seeing banks go online, the more their core banking systems need to catch up with the speed, the security features that are required for that kind of work to happen. So this is a window, I think, for startups that are doing anything that is within embedded financial tools. I think that's a wide open space to take advantage of. Obviously, you're going to have to look at a lot of things. Things like security is quite obviously heavy in this space. So if you're going to build anything for this space, especially the back end of traditional banks, and helping them increase their speed, increase their efficiency, improve their interface, customer experience, etc., then security is something that you're going to have to think about. But we are seeing more and more people go into building infrastructure where everything sits on top of it. And we are seeing that those companies are generally more resilient than any other.
That's a really good insight. Embedded financial solutions. It's definitely one to watch out for. Yeah, I think this is definitely a trend. If you're a player in the fintech space, then now is the time to look at this trend and see how you can integrate yourself, because I think these bigger companies are just going to swallow the market in a couple of years.
These are the
So
billionaires of tomorrow. They've started building out the infrastructure that everything will sit on. I mean,
yeah, it's looking that way right now. So you may want to grab a piece of the pie so that down the line it starts to make sense. Anyways, our final story for the day is on AI, of course, because why go through a podcast today without talking about
I
AI?
mean,
AethexAI, I don't know whether I'm pronouncing that right, is a startup that is focused on building localized customer support automation for Africa and the Middle East. And they have just raised $3 million in pre-seed funding to handle regional dialects of English, French, and Arabic, and to reduce latency. It's interesting because they are developing their own small model architecture known as the Kora series. For the technical people, these models range from 300 million to 1.7 billion parameters. The technical people know what that means. And yeah, they are very, it's a very interesting startup because they have raised $3 million in pre-seed funding. So clearly there's something that they are doing right. And it's now a space that we are seeing more and more often. I think the other day I saw Yan GPT, which is also another startup that is doing something similar, providing localized AI, voice AI, I should say. They were just acquired as well by another company. So it's a space that investors are becoming more and more curious about. We're seeing more money being poured into voice AI. And if you remember the other day, I said, I think it was the last podcast, I said, I'm looking forward to more voice AI experiences in Africa because we have a lot of oral tradition. There's a lot of oral first communication, if I can put it like that. So, voice AI solutions are something that I think would be interesting. And there is now beginning to be growing data to support this, my theory.
yep, 100%. I think local languages are going to be a big space to invest in going forward. And you know what I've realized recently is we speak English, yes, and we communicate, yes. However, the way we phrase our words, our sentences is very different, and it's based on the culture of the place. Now, when a Nigerian starts speaking the English that you guys speak, is it called pigeon?
Yeah.
Yes. I I will understand absolutely nothing. And yet there's a nuance to that communication that Nigerians love. And I do think that as we try to market products, get loyalty from customers, being able to communicate in a language that they understand and love and appreciate is becoming more and more important. I also do think that part of the reason why this is becoming a big thing is because the market is moving to Africa and the Middle East, because that's the place with young people at the moment. So you have to more and more cater to that market, because previously these two markets have been overlooked because they haven't had the numbers or the income. But now people are recognizing that this is where the market is moving to, and so they have to find a way to cater to it. To be able to speak to a person, I work with a guy from Egypt. We A lot of times there's miscommunication because the way he communicates, it's like he directly translates Egyptian into English, and so he'll say something and I'll think it's rude, but that's not his aim. And so we can get a lot of confusion. Anyway, I think I've gone on a tangent. I apologize. Moving back to the story, I think the deliberate architecture is part of the charm, because it's small, it's fast, and it's cheap to run. And I do think that more and more people should think about this kind of architecture moving forward, because frontier models are the models that are being used by enterprises are very expensive to use and run. And so this is a cheaper way of doing it, it's a faster way of doing it, and it gets results quick. Already we're seeing they are running 17,000 plus calls daily, because they're able to move very fast. And it will be so crucial for things like KYC, debt collection, customer activation, in a manner that actually honors and understands the end consumer, as opposed to forcing them to speak in a language that is not really theirs.
I agree with you. And I also echo your sentiment on working with other people that are not speaking, how would we put it, your accent of English, for example, and using translation tools. It can be quite tricky. I've also been in global teams where you're working with someone in Russia and they are speaking, you're exchanging messages, and you're looking at this message and this is quite rude, you know. Um, but then when you actually talk to the person, like a voice conversation, you realize they are just like talking normally. It's not, there's no hard felt emotion there. They are just communicating. And then I had to at some point start to take a step back and like actively think about that cultural barrier as a thing. So we need more and more solutions like this, especially like you said, if the market is coming to Africa and the Middle East, then you need to be able to communicate with the people of Africa and the Middle East. So I believe voice AI solutions like this one and others are definitely going to be key players in a couple of years. Granted, this trend continues to hold, right? So we'll see.
Absolutely.